हे इन्वेस्टर्स, वेलकम बैक टू विशाल वेल्थ व्यू। लास्ट 2-3 महीने में मार्केट काफी ज्यादा करेक्ट हो चुका है एंड आई होप यू आर स्टिकिंग विथ योर इन्वेस्टमेंट एंड यू आर नॉट पैनिक सेलिंग। दिस इज अ टाइम जहाँ पे आपका पेशेंस टेस्ट होगा इन इक्विटी मार्केट, सो स्टिक टू द लॉन्ग टर्म प्लान गाइस। सिंस द मार्केट हैज करेक्टेड अ बिट, दिस माइट बी अ गुड टाइम टू बिल्ड न्यू पोजीशन टू बी ऑनेस्ट। तो अगर आप एक ऐसे इन्वेस्टर है जो कि लार्ज कैप कैटेगरी में इन्वेस्ट करने का सोच रहे हैं, then this video might be for you because in this video we are going to do mutual fund awards, large cap categories. Before we jump into this video, investors ये एक investment advice नहीं है. Please do not invest in these mutual fund after looking at this video. जब भी आप अपना पैसा इन्वेस्ट करें, it's your responsibility. So do the due diligence properly before putting your money in any of these mutual funds. So if you're someone who is planning to invest in large cap category, you are someone who is thinking about not investing in high risk asset, to be honest, or now you could invest in either small cap or mid cap, and you are trying to avoid volatility. That's why we are going to measure these mutual fund, these six mutual funds, which are, to be honest, a winner in these categories, into two different parameters. One is returns, second is beta score. Now, returns is fairly simple. Returns minus expense ratio, which is what's the amount of value you are able to generate minus तुम कितना cost ले रहे हो. And beta score is something that is important for large cap equity or large cap mutual fund because it tells you about what's the volatility of a mutual fund with respect to the index. Now, if you're someone who's thinking about investing in a large cap mutual fund, एक primary motive आपका ये है कि you do not want to open yourself to high risk and high volatility that's available in either mid cap or either small cap mutual fund. So that's why beta scores become really important for uh, large cap mutual fund. So before we get this video rolling, I want you to write in the comments what do you think is the best performing mutual fund in the returns category. So coming up to number three in beta category, we have SBI Blue Chip Fund. It had a beta of 0.88. Now let's see what are the sectors in which this mutual fund is investing in. So if we check the analysis for this particular mutual fund, the sector allocation looks something like this. Almost 26% is in financial and 22% is in other. So others and financial make up almost 50% of this index. Then you have 12% automobile and 7% in healthcare, along with 10% in consumer staple. So if you include consumer staple and financial, that is a really low volatile indexes or stocks. So this mutual fund is holding its holding its majority allocation in financial and consumer staple, and that basically relates to high or like low beta score. So number two in the ranking for the beta score, we have ICICI Blue Chip Fund with a beta score of 0.88. Let's see what this mutual fund sector allocation looks like. तो अगर अपन आईसीआईसीआई प्रूडेंशियल ब्लू चिप फंड को देखें तो 3 year CAGR for this fund is better than the SBI blue chip fund. Along with this, if you look at sector allocation of this mutual fund, almost 26% is sitting in financial and 16% in others. उसके अलावा they are holding almost 12% in energy and consumer staples. They are holding really small because I think this mutual fund believes in a philosophy that will not invest in high PE equities. That's why I think all the equities in which they are investing in have a decent amount of valuation, have a decent valuation, and are not and cannot be considered an overvalued category at all. So I think this is a good mutual fund, and if we see the mutual fund manager, they have been managing this fund for almost 7 years now. Anish Barkley. So the best performing mutual fund in terms of beta parameter is DSP 100 mutual fund. So let's take a look at the sector allocation for this mutual fund. So returns for this mutual fund is actually better than ICICI and SBI Blue Chip Fund. Now, if we see the sector allocation, oh my God, 41% in financial. Talk about fucking diversification. Like, talk about fucking diversification, guys. This is called holding taking risk and building position. Almost 10% in HDFC Bank, almost 10% in ICICI Bank. Clearly, these two sectors, private banks, have not performed for last 2 or 3 years. And there's a good chance that in next 2 years, 3 years, this sector is set to boom. So if these mutual fund managers are building upon that story, I think they might be onto something. But it explains why the volatility in this index is, or sorry, in this mutual fund is really low and the beta score is good because almost 40% is in financial, and financial stocks in India are to some extent undervalued or fairly valued, and there is not a decent chance of correction from the current valuation for all these stocks. Now let's talk about returns. So starting with number three, with 21.53% return in calendar year 2024 and 0.82% expense ratio. That means the return is around 20.67, give or take. And that mutual fund is Baroda BNP Paribas. So let's take a look at sector allocation for this mutual fund. So when I'm talking about returns, I'm only talking about calendar returns for year 2024. In the year 2024, this mutual fund performed really well. But if we look at 3-year annualized return, then it's still in the range of DSP 100 mutual fund and ICICI Prudential mutual fund. Let's take a look at sector allocation. So this mutual fund also has a high sector allocation in financial and high equity allocation in financial and energy sectors, and technology as well. They make up almost 50% of this particular like mutual funds AUM. Now with 21.68% return in calendar year 2024, the second rank goes to Invesco India Mutual Fund. Now this mutual fund has an expense ratio of 0.75. Now the actual return that you're generating in that year, calendar year, is 21.68 minus 0.75, whatever that is, which is, I think, around 20.90 or something. Now, let's take a look at the sector allocation for this mutual fund to see how they are generating good returns. So, if we take a look at Invesco India Large Cap Mutual Fund, 3 years, this mutual fund is not even performing better than the mutual fund that's ranked third. And if you see in 3 years, it's only able to generate 14.38% return. If we take a look at the sector allocation, then almost 28% is in financial sector. And I think this mutual fund is also heavy on private equity, private banks like HDFC Bank, ICICI Bank, and have good amount of allocation to technology and capital goods. So what does it mean? It means that they're able to generate good returns in year 2024, but they are not a consistent performer. That's why over the last 3 years, the returns was not good. In the end, we'll do an analysis for all these three mutual fund over a horizon of 3 years and 5 years as well. So just wait till the end of the video. Now, with almost 23% return and 0.67% expense ratio, the last mutual fund, which is number one mutual fund in terms of returns in calendar year 2024, is White Oak Capital Mutual Fund. Now, this mutual fund was launched in year 2023 or 2024 only, so it's pretty new. And I think the investor should be really very well investing in this mutual fund because the returns does not have a guaranteed history, and it might be a possibility that they would have taken a huge amount of risk in year 2024 that just turned out really well. So let's take a look at the sector allocation for this mutual fund. So this is a fairly new mutual fund and it does not have a 3-year return history. So we are going to skip to sector allocation. Boom. Oh, so it also has a sector allocation of almost 32% in financial. That's funny. Most of the mutual fund managers are investing heavily in financial, and I think financial holds almost 25 to 30% in Nifty 50. So it's fair to allocate this much amount of capital to financial sector. And if we see the highest holding, again, ICICI Bank and HDFC Bank, two of the largest bank in India. I feel the financial sector might be up for a rotation because of private bank being the biggest underperformer and the meme content for last 2 3 years, and I think I want to bet for the underdog in the coming years. So yeah, let's see. Now for better comparison of these mutual fund, let's take a look at their rolling returns. Now you might be wondering what are rolling returns. Rolling returns is basically if you're investing your money today and you're locking in that money for 3 years or let's say 5 years, then what's the return you are able to generate in 3 or 5 year window in a time series format. So let me help you explain that with a graph. So over here you have three line, each representing three different indexes or mutual fund. One is Invesco India Large Cap Mutual Fund. The blue one is the Baroda BNP Paribas Large Cap Fund, and the green line is the Equity Large Cap, which is the benchmark. So any data point it represents that from a period of March 3 to uh, March 3, 2014 to March 3, 2017, what was the CAGR I was able to generate? So if I invested in Invesco India Large Cap, then I was able to generate a CAGR of almost 19.44%. If I invested in Baroda BNP Paribas, then I was able to generate a CAGR of 19.64%. And if I invested in benchmark equity large cap, then I was able to generate a return of 13.60%. So this is the concept of rolling return. So if we see this graph, then both Invesco India Large Cap and Baroda BNP Paribas, they are almost performing in a similar way, and they are always beating the benchmark, which is a good thing. That means they are giving the value for the money to its investors and to its customers. So another interesting data to note here is for Invesco and Baroda Uniparibas large cap mutual fund, if we see how many percentage of the time in a 3-year horizon are they able to generate a return of 12% or more? Because if you're investing in large cap, then that's your minimal expectation. Okay, I would be able to generate a 12% return in 3 years. So 27 plus almost 30, which is 57 plus 15, which is almost equivalent to around 72. So almost 72% of the time, Invesco India is able to generate a return of more than 12% in a time horizon of 3 years. Now, if we see the same thing for Baroda BNP Paribas large cap fund, then you'll see that almost 17 plus 33, which is 50 plus 18, 68% of the time, you're able to generate a return more than 12%. Whereas in case of large cap, you're only able to generate 20 plus 14, 34 plus almost 37% of the time you're able to generate more than 12% of return. So clearly, both of these mutual fund are giving some amount of value to the investor, because in a horizon of 3 years, both of these mutual fund can generate more than 12% return with a probability of almost 65 to 70%, whereas large cap can only generate a return more than 12% with a probability of around 30-35%. That's it for today's video, investor. I hope you enjoyed this video. If you like this video, do hit the like button and subscribe to this channel because it helps support this community. See you. Bye bye. Happy investing and don't panic. Sell.